in respect of everyone's time. So thank you all for joining us this evening. I'm Sika Lawson. I'm the founder of Macola and Macola Media House. And just a bit about me, I have a huge passion for entrepreneurship and community building, primarily with the Black community. And with that, my mission really is to empower small Black-owned businesses and independent sellers. So Macola is a multi-vendor e-commerce platform, very similar to an Etsy type concept where our sellers are able to create their own independent storefronts and sell their products directly to consumers. Coupled with that is Macola Media House, which is really a resource hub to help our entrepreneurs grow their businesses, scale their businesses, and build generational wealth. So that's what I'm big on, is helping our community actively close that wealth gap. So Macola Media House is starting a new series called Ask the Expert. It's our mastermind sessions where we have the blessed opportunity to meet directly with top business professionals and subject matter experts. And these sessions are really designed to equip people with the knowledge, strategies, tools, whatever they need to grow and scale their businesses. So today we have Michael Howard. Michael was born and raised in Fort Worth, Texas. He received a bachelor degree in political science and a master's in public administration from UNT. He began teaching himself about investing and studying cryptocurrencies in 2020. And in 2023, Michael actually founded AfroBlock, which is an investment firm designed to help the working class people retire. And we are very fortunate to have him. He is now a part of the elite 5% of Black Wealth Advisors. So, Michael, thank you for sharing your knowledge with us today.
No problem. Thank you for having me. All right. Let me share my screen. Can everybody see my screen? Can everybody hear me?
Try it again. Let's see.
Can hear you, can't see the screen.
Okay.
We good to go?
Yes.
All right. All right. So thank y'all for having me. Sika, thank you for having me on this platform. Thank you everybody for taking time out the day to join us. Hope this is a educational experience for everybody. And let's get started. So a little bit about my company. Number one, we are a fiduciary, and what that means is that we are legally bound to act in our clients' best interest. So it's just a way of saying, we're not here to push any high commission products or force you to buy anything or anything like that. We're really here to look out for the clients. We're a registered investment advisory firm, registered in the state of Texas. And we specialize in investment management services. So with that, I'm just going to put this little disclaimer here. This is part of the legal compliance that we have to do. Basically, it just says that this presentation is for informational, educational purposes. Nothing here is presented as financial advice. So you can take a screenshot of this. I don't want to just leave it up there all day. So a couple of crypto basics. You interact with blockchains with wallets. What blockchains are is they're the computer programming that allow cryptocurrencies to run and operate. It's not too important to get into the details of them, but the main part is that you will want to download a wallet on your computer or your smartphone, and that would allow you to interact with the blockchain and thus cryptocurrencies. Different wallets can access different blockchains. I think I have like 8 wallets on my phone, and that's because I'm interacting with just multiple types of blockchains, and so it's the deeper you get into the space, the more equipment you end up having. An exchange is not a wallet. This is a common misconception or a common flaw that a lot of people in crypto have, is they'll get on an exchange and they'll buy some cryptocurrency and then they just leave it there. And what can happen is your assets can get locked up, the entire exchange can go under, and then you just lose everything. Or or you know, lose access to the exchange because of some legal or some regulation that your country decide to put in place. So we never want to leave our assets on an exchange. And then the basics, in order to get like into the crypto space, you have to turn your dollars, your fiat currency into crypto, and you do that typically through an exchange. So just going over some the current state of the crypto industry. Right now, we have a little bit more regulatory clearance since the new administration has taken place. That might be the only good thing I can say about it. And crypto ETFs have definitely come in and changed the entire landscape of crypto. Anybody who acts or talks as if it hasn't, I just don't think they're a reliable source of information. The ETFs have changed literally everything on how crypto operates, especially with the 4-year cycles that people often talk about. There's a litany of scams in crypto right now. Even the president, he pulled one. Celebrities have done it. I think Rick Ross had one earlier this year. Scamming is at an all-time high in crypto right now because of the new administration and the perceived lax regulation in the space. And so you just really want to be careful when what you're buying, what you're connecting to. We'll go over some guidelines to help you protect yourself, but just know that right now it's just drought with scams. And then the cancel alt season. One of the big draws, or one of the big things that attracts people to the crypto space is honestly the opportunity to turn, you know, $1,000 into $40,000. And that typically comes from what's called altcoins or alternative coins. And that's basically anything outside of Bitcoin and Ethereum. And but this cycle, we really just haven't seen that happen. And we don't know if it will happen. And mainly that's due to the crypto ETFs. And let me pull up this chart over here. What this is a Bitcoin dominance chart. And alt season usually happens when you get Bitcoin dominance goes down like this. You can see how the correlation of these two lines, that's all the altcoins. And when this is going up, they're raising in value. But what's been happening since we've had the ETFs is that Bitcoin has just been going up steadily. Everything else has been going down. And so that opportunity to turn, you know, $10,000 to $1 million, it really hasn't presented itself in the space. And that's been the case, you know, the last couple of cycles in crypto, but we're not seeing it. And the main reason for that, when I say the ETFs have changed it, is due to the capital rotation. Normally, when people come into crypto, they buy Bitcoin, and then over time, they would spend that money and buy other smaller projects. With the ETFs, you don't have the option. Like, it's just all you can buy is Bitcoin. And even though like the ETFs are more accessible, like, you know, you have older investors, you know, people in their retirement funds, they have access to the ETFs, to the Bitcoin ETFs, but they don't have access to anything else. And so, you know, it's really just locking up all that capital into the main asset, Bitcoin. And we're not seeing the traditional trickle down effect that we've seen in the past to where it would increase the value of the other projects or the other coins in crypto. The future of crypto is really, has anybody heard of Web3? You put a 1 in the chat if you have, or thumbs up if you have. I'm gonna go with no. So right now we live in like a Web 2 world. Web 2 is basically when users are able to contribute to the internet. So that's like your Facebook, your YouTube, even MySpace, but we're able to like contribute content to the internet. The only thing with Web 2 is everything we contribute to is centralized. So Facebook is centralized, YouTube is centralized, Twitter is centralized. And what those have in common is like they set all the rules, they tell you how much, if you get paid at all, for your content. And but in reality, what would those platforms be if users weren't contributing their content to them? You'd have nothing on YouTube, you'd have nothing on Facebook. Users make those platforms what they are. And so what Web3 is the decentralization of the internet. And so instead of having these centralized platforms that set all the rules, it'd be decentralized and users would set the rules and users would have ownership of the content and the revenue that they're generating. It's a really more of a concept right now, but crypto is the backbone of what Web3 is going to be. And so over time, we hope to see that Web3 continues to develop and it's done on the back of crypto. And hopefully, the long-term goal is that the crypto that are used to enable and strengthen Web3, that those eventually increase in value for early investors. So, quick discussion about Bitcoin. Bitcoin is the first cryptocurrency. Unlike all the other currencies in the world, unlike the dollar, the yen, peso, whatever you have, all the fiat currencies we have in the world, Bitcoin is the only currency that's not backed by a central bank. And the benefits of that is that one, Bitcoin has a limited supply. If you're in, investing spaces or finance spaces on the internet, you probably heard about, the money printer and Jerome Powell, turn on the money printer go brr, all that. That's because the central bank, the Fed, can literally print dollars out of thin air. And part of the reason we have like ongoing inflation in this country is because their rule is that they're always going to print more money. And it's supposed to be about 2% to devalue your current dollars by 2% each year. But with Bitcoin, you don't have that. Bitcoin has a set limited supply. I think it's like 21 million Bitcoin will only ever exist. And so like once all that's mined, there is no more. And so Bitcoin just offers an alternative currency to central bank rule and their endless money printing that all central banks do. And that's that's why you've seen the value of Bitcoin go from, a couple of dollars to now it's at like $86,000 per Bitcoin. So here's some best practices. I think some of the main ones are have 2 sets of wallets, have your hot wallets, and your hot wallets are things that you will connect to the internet. So, quick example. This is a DeFi protocol. You would go here to, to make liquidity pools or to trade currencies. You can, swap from ETH, and you got a selection of all these different coins that you can pick from. But here, you would connect, all these are your hot wallets that you can connect. And you would connect these to the protocol to do your transactions. What a cold wallet is actually a physical wallet. I actually have one, well, I'm gonna go get it. It's a physical wallet that you have. It almost looks like some of them look like a cell phone, some of them look like a USB, like a little USB case. And that would hold the computer code that holds your accounts. And so it's basically, you want to treat your cold wallet like almost like a safety deposit box, or like kind of like your life savings. You wouldn't just go to the grocery store with your life savings. That's not something you would do. You would go with your wallet with just your debit card, but you wouldn't be out there scanning, swiping a card that has your life savings on it. So that's like that's the difference between your cold and your hot wallet. Never share your keys to anyone. That's part of the scams in crypto. I experienced one when I was early in the space, and I was trying to troubleshoot one of the protocols I was using. And so I go on a Telegram, and I say, hey, I'm having this issue, because I'm gonna help me. Sure enough, someone slides in the DM. Their name is called, support. And so I'm just going right along, like, okay, yeah, this is the problem I'm having. He gives a long, convoluted explanation and says, if you connect your wallet to this, and enter your passcode, your passkeys, we'll be able to fix it for you. And then I'm looking at it, and I'm like, this don't feel right. This don't seem right. And had I had done that, he'd have been able to take all the money out of my wallet, and pretty much make that wallet useless afterwards. And so it's just something you have to be aware of when you're interacting in the space, that there are nefarious people kind of everywhere, and they have methods to try to get at you different ways. I wanted to go over some of the passive income strategies. You have two main ones. You have two main ones in crypto. You have staking and liquidity pools. Staking is when you lock a token to basically help the operation and security of the blockchain. And let me see, I thought I had one. And this is kind of an example of it. When you stake, you'll have your annual rate of return. These are the different rates that you would get for staking these different coins. And so you would have your choice to pick, what coin you think is the best, along with what rate you want to get for it. And really, you just staking is pretty simple. You just click here. Well, I'd have to scan it from my phone, but you basically just tell them how many of a coin you want to stake for how long, and you'll get a reward based on that. Liquidity pools is a little bit more advanced, and is more advanced because it's just more complicated. Here you can see these liquidity pools right here. This is Ethereum and Ondo. Ondo is like a big cap project that's it's kind of like I think they're like securitized, or they tokenize like government securities. I think that's like one of their main use cases. But if you provide liquidity for them, you'll be getting almost 70% APR right now. I say it's more advanced because when you're providing liquidity, you run the risk of impermanent loss. And what that is basically the value of the tokens that you provided liquidity with. You would have made more money had you had just held the tokens outside of the liquidity pool, as opposed to putting them in the liquidity pool, if they go up in value. If they go down in value, you can lose everything that you put in, because it's locked and those coins become worthless. So it's just a more advanced strategy for passive income. And I say passive income. I try to remind people that there is no real thing as like absolute passive income. No matter what you do, whether it's real estate, owning a business, you're going to have to do some type of managing. You're going to do some type of observation. There's going to be some type of adjustments that you have to make. And so it's just keep that in mind, because I think too often people think about passive income as if they can just go to sleep for 10 years and keep making money the whole time. And that's not the case. Really with anything, you have to keep an eye on whatever you're investing in. And crypto is no different. This is an example of a balanced crypto portfolio. This isn't this, once again, this isn't like a recommendation of what you should do. This is just an example of what a balanced crypto portfolio would be. Get you some Bitcoin and then based on your risk tolerance, decide how much or how little of that you want it to be. Large cap alts, those are basically altcoins that are over 1 billion. So when we say that, let me see. At CoinMarketCap, you can kind of go to the rankings, and so all these would be considered large cap coins. It was really like the top 76 or top 70. All these that have a billion market cap and up. And that's just because like those are safer. And right now, the only ones that are really appreciated in value are your large and mid cap altcoins. None of your small ones have really done anything. Most of all the money that's been made in crypto over the last year and a half has been with your larger cap altcoins. So just keep that in mind. Your small cap alts, these are, your higher risk, high reward. The draw for them is that this is where you are able to turn, $1,000 into $100,000. But you also run the risk of it turning into nothing. So you gotta keep that in mind. Meme coins, I wouldn't buy one under, I don't know, $50 million market cap right now. Maybe even 100, just because so much of them have just been scams, and they've just been, draining liquidity. They've been rug pulls, and it's just hard to tell. I feel like it's safe to say that 99.9% of any meme coin right now is going to go to zero. So that's just that's your highest risk play that you can have in crypto. But it does have the reward. You are able to, you can turn $40 into a couple $1,000 if it works out. It's just so rare that it does right now. Some risk management strategies. Give me 1 second. Only invest what you can afford to lose. That goes with almost any investment. Typically, honestly, what I tell a lot of clients is if you don't have savings, you probably shouldn't be investing right now. You should probably work on getting your savings built up. Because what normally happens is when people start investing and they don't have any savings, their investment account goes up, but then like they get a flat tire, their alternator goes out, kids need something, in short, life happens. And then where are you going to go for money? You're going to that Robinhood account, and now, you're just kind of spinning your wheels. So I always say that savings is kind of like the protection for your investments, because you want your investments to grow over time. You don't want to keep drawing away from them, because then you'll never get anywhere. And then, like I said earlier, use Safe Wallet and key practices. When I say key practices, this means if you're going to be in crypto, write down your passwords and passcodes. I think it's about 20% of the entire Bitcoin supply has been lost to people who have just like lost the codes or the passwords to the wallets. You don't want to be that person. I think every year you'll hear a story about somebody who bought Bitcoin back in like 2012, and it turned into like $30 million, but they threw away their passcode and they're scouring through landfills trying to find it, because it's $30 million. Who wouldn't? But, a way to avoid that is to write down your passwords, write down your passcodes, keep it somewhere where you know you can get it. Take profits, cut losses. there's a saying that I think I have it somewhere else, but you can't take screenshots to the bank. A lot of people in crypto, they'll buy something and then they'll appreciate in value, and then they're like, oh, there's the maze of this number. Oh, my $1,000 turned into $30,000, and instead of taking some of that profit, they just hold it, and then over time, like that $30,000 decreases, and they're like, oh, we'll bounce back, and then before you know it, they're back at $1,000 or lower. That's what we call a round trip, a round trip flight in crypto. You end up right back where you started from. So I'm always saying, take profit, cut losses. That's a way of just maintaining your money in crypto. Don't click links someone DMs you. That goes back to the story I told, especially like once you get on Telegram or Twitter or whatever social media platform. If you're in crypto, people are going to DM you, and are going to try to get you to click on different links. Just the rule of thumb is to always ignore it. Don't use leverage. Leverage in the traditional finance space is options. It's just an advanced high risk tactic. Leverage in the crypto space, you can literally there are exchanges where you can do like 300x, leverage plays. And the reason, let me see if I can pull up an example. The reason why you don't want to do leverage is this is just a daily chart. Like this candle here, if you had leverage, if you did a leverage play betting that Bitcoin will go up, this wick right here, this might only lasted 1 minute, but that little red line going down, that could have triggered your margin call on your leverage play. And then you'd have to put more money into the platform, or you'd be liquidated. Even though eventually it came back up, still, that one wick down, that little red line, that's what we call a wick. That would have kind of killed your option, your leverage play. So it's just very, very risky. So I always just tell people, if you're gonna be in crypto and you're gonna be trading, don't use leverage. Then just some other guidelines. There are no guarantees in crypto, but if you are gonna invest in cryptocurrencies, or specifically like altcoins, look for projects that have a working product. You don't want to buy something that all they're selling is hopes and dreams, but they don't have any like functional product to achieve that. Crypto is full of those things. Study the use case. Once again, like if a project is saying, they're gonna provide a way to authenticate sneakers for sneakerheads. Look at the market for sneakers. What's the total addressable market? If it's only like, $100 million, and the company's trying to tell you that they're going to be valued at $2 billion, does that make sense? So those are some of the things that you can do to just flesh out to see if it's a good investment or not. There aren't any guarantees. But, there's some things where you can just kind of do some research and tell that, hey, y'all are kind of full of shit. So, that's just a tidbit there. Transparency is key. Whenever you are looking into a project, you want to look at one. It should be easy to find the information that they're claiming, and information about their project, information about the market. All that should be easy to find. If you're looking at a project and you just can't figure out, from looking at all the documents that they provide, what they're about, what they're trying to solve, what product they have, that's probably a big red flag that, that obscurity is intentional. And so, you just want to keep an eye on, or keep in your mind that transparency is key in crypto. And once again, you can't take screenshots to the bank. If you're up a lot, you might want to sell a little, because it does no good to, take a screenshot of your 400x play and, you don't have any real money to show for it. For crypto and taxes, a wise man once said, pay your taxes, y'all are hustling backwards. If you're not familiar, that's a quote from Jay-Z in one of his songs. Um, One of the things about crypto is that it is all like it's a public blockchain. There have been multiple cases of the FBI being able to track people down by like locating the server that the transactions went through, and then like backtracking the IP address of who ran those transactions. So if you're in crypto thinking that you're going to be able to avoid paying taxes from all the money you make, think again. It's not going to happen. So yeah, just make sure you're paying your taxes on whatever you make in crypto. Yeah. And then over here, these are just where you can find me, my website, my Instagram, TikTok, Blue Sky, YouTube. So I just want to open it up to any questions anyone might have.
Yes, thank you, Mike. This was very informative. I know we have some questions in the chat, so I'm going to read them out, and then if anybody else has any, feel free to just unmute. So the first one we have, and you can say whether you're able to answer it or not, but Olanike asked, what is the best crypto to buy and what is the future of crypto?
So I can't answer what is the best one to buy. That that's a that's a financial. I don't know anything about the person that's asking that, so I can't tell them what's best to do with their money. Um, but what I can say, the future of crypto, it it's I guess like the master plan would be like Web3 coming to realization, and where you have like really the entire internet is run on crypto. That's the ultimate, goal of crypto. How long that'll take, if it happens, you know, I don't know. I don't think anybody can tell you, but that's the ultimate, goal for crypto.
Okay. And the next question is, how does one start investing in cryptocurrency?
So the easiest way would be to, um, I think I use crypto.com. There, to me, that's the easiest way to get money on and off the, in crypto space. You kind of go through some of the same things as you would like opening a bank account. Um, but, you sign up, get all your information, give them your picture of your ID, whatever. And then like you'd be able to, select different currencies to buy into. You can do a little research. Um, yeah, to me that crypto.com is like the most user friendly one. There are others. There's Coinbase. Um, you can buy. I think you can buy like Bitcoin right off of Cash App. So there's different options out there. You kind of just got to play around, find the one that works best for you. But for me, it's always been crypto.com is the easiest one. So that's a good place to get started.
Yep. And then Judith asked, how is cryptocurrency regulated?
It's not. Thanks to the current president. Um, he's really
Was it
weak.
before?
Yeah.
Oh,
Before Gary Gensler he had a real. Um, I want to say it was almost like a suffocating grasp on crypto because they were trying to apply rules from the Great Depression in the 1940s to to now, and they just didn't apply. and there wasn't really enough clarity for people in crypto, especially the crypto companies, to really operate in a way that was compliant, because it's like you it, it's like having rules for horses and carriages when we have highways and cars that go 120 miles an hour. It's like you can't have those rules don't mesh. And so, but right now, with the new president, there's very little regulation in crypto, outside of like the fraud and the rug pulls and things of that nature. That's still regulated. The FBI still goes after that. Department of Justice still goes after that. But outside of that, it's not a lot of regulation right now.
Oh, okay, and let's see. Someone's asking, how high can Bitcoin and Ethereum go?
Um, well, some people say Bitcoin can go to like 1.5 million. Um, the price of Bitcoin is really based on supply and demand. Um, the supply is limited, but we just don't know what the demand is ultimately going to be. It is going up. It's held by, you know, countries have it as their reserve currency. So there is, a growing demand. But will it ever get to, 1.5 million that people throw out there? I don't know. How fast that'll happen, I couldn't tell you that either. We don't know if there's going to be something else that comes along and kind of takes all the thunder away from Bitcoin, within the next 10 years or 5 years.
Hmm.
So, so we don't know. As far as like this year, it's supposed to hit like, it was predicted to hit like from 150,000 to 200,000. But, if the president keeps trashing the economy, that's not going to happen. So, if we go into a recession, Bitcoin's not going to 150,000 this year.
Yeah.
So, yeah.
Okay. And a question, does your firm provide crypto-based investment products?
Um, the only one we do have is Bitcoin ETFs, and so that's the only one I would be able to offer. That's the only one our custodian offers right now is Bitcoin ETFs. Eventually, I want to be able to offer, a wider array of, options in crypto, but uh, I'm still getting my firm started, so I'm just, getting the bases out the way. So right now it's mainly just stocks, but eventually, I would like to find a custodian that has more options for crypto.
Okay. And I'll combine these two questions, and then anybody else, if you have any, please feel free to unmute. I had a question just with how volatile crypto is. Do you advise people to cash out their profits once they reach, like, let's say 10 grand, move it into a more quote unquote secured investment vehicle? And I think somebody had a similar question, Judith, also kind of what are the advantages and disadvantages of crypto versus traditional stocks?
Um, so I answer the first one. Uh, it depends on what you started with, when you get to the 10 grand. Um, and honestly, it all, you have to build just an overall like investment strategy and then operate within that. And
Hmm.
so it's not just about a dollar amount that you hit. You have to, it's all about like building just like a comprehensive strategy and then executing that strategy for all the assets that you hold. Um, and it depends on the market cycle. Like that's what I do with my firm. Like, we do a lot of research of like where do we think the market's headed. and how will that impact assets. And so, you know, if you just go by, oh, well, I got 40% in Bitcoin, I'm gonna pull it out, that could have been like somebody buying Bitcoin at 30,000 and then pulling out at what, 55,000?
Mm-hmm.
And it went on to go like, I think up here, it went on to go up to like, over $100,000. And you would have missed out on that because you were just stuck to, a predefined number.
Right.
So it depends on like just the your overall investment strategy, your management strategy, all of that. The second question, um, what was the second question? I'm sorry.
Advantages of crypto versus traditional stocks.
Um, I would say just it's higher risk, higher reward. Like the money that you can make in crypto, if things go right, is life changing. Like I think I have a slide where I show like past performances. Let's see if I can find it. Here we go. You take a look at these. Like these are like actual investments that people had. Solana sold this one right here. That made people millionaires, in 2020. And so those are type of returns that you can't find in the stock market. Now, how common those are, they're not very. There's been, you know, 20,000 crypto projects made, and 99% of them have gone to zero. So, it takes, it takes just a special strategies, good execution. Like, it's not a common thing to do, but it is possible. So that would be the advantage of crypto over the traditional stock market.
Okay. All right. And Olanike, I think you had a question if you want to unmute. Anybody else?
Hi, thank you so much for the impactful session. I'm joining in from London, and I just wanted to ask, which one do you have in your own portfolio? Uh, I know it's a bit funny. I mean, I just wanted to know
Funny thing,
what kind of
I
thing.
actually liquidated my portfolio on February 1st when Trump first started talking about the tariffs. Um, like I said, like with my management strategy, that's like we don't have like set rules. We're kind of reading the market, reading the economy, and I sold at like I think Bitcoin was at like 99,000, right at 100,000,
Wow.
and February, it's the entire market's just been going down. So I've liquidated everything. But I did have some of my main projects were Chainlink, Bitcoin, Solana. Um, I had Rubrik. I could go on a list of projects you never heard before. um,
What
but yeah,
about you? And the
so
next, thank you, because I did ask, the next question I would ask was that do you have anything like XRP, Ethereum, the Shiba Inu, or it's just the hype, you get on the internet, and because some of us don't even know anything about it, that's why I'm even joining. I'm like, okay, you have a little bit of this, you have a little bit of this, so which one should you?
so I was never big on XRP. Um, they've performed well, over this past year, but if you look at their over the last 5 years, they're they were staying flat for like 4 years until this past year. But I've never been a big fan on XRP, mainly because the success of Ripple isn't really tied to XRP, to the token going up in value. And so, even if their plan goes, everything goes as planned for them, and Ripple becomes the platform that all the banks use, all the banks can use that, but it has no direct correlation to uh, the value of XRP in the long run. So I've never been big on it. I've had Ethereum, mainly because Ethereum is it's kind of at the forefront of like the smart contracts that crypto kind of runs on, or that is like widely used in crypto. And they've done a lot of advancement in over since I've been in the space. I remember there was a time when to do an Ethereum transaction, it costs like $700 to do. Um, and so it was just hard to buy and sell anything because like you're only you got to pay $700 to make $100 transaction. Um, but since then, like they've come down a lot. Like I think the last Ethereum transactions I made were like maybe a couple of bucks. And so, they're still working and making the project better. Um, but yeah, I've had some of the big ones. I never got into Shiba Inu, and I think that's one of the ones. I honestly feel like it's one of the ones that most people just need to take out of their vocabulary. I know people that I have someone who's always asking me about Doge. I'm like, you need to take Doge out of your vocabulary. Like, just it's time to move on to other projects. It's done what it's gonna do. It's not really gonna go up from there. I think Shiba is one of the ones that you know, if you didn't get in, what was that, 3 or 4 years ago, and make that big jump in money from that, I don't see it happening now.
Thank you. Thank you.
No problem.
Michael, I have a question. Two questions. What's ETF? And then how can you help me develop my investment strategy?
So an ETF is an exchange traded fund. Uh, Basically, if you've heard of a mutual fund, it operates similar to that, except for you can't buy a mutual fund on like you can't go to Robinhood and buy a mutual fund, but you can go to Robinhood and buy into an ETF. And so it's just a more accessible like basket of stocks, and they have ETFs for different sectors. They have oil and gas ETFs. They have tech ETFs. Just there's just a litany of them. And but it just makes buying a diversified basket of stocks easy. In order to help with your investment, just schedule an appointment. Go to my website, afroblock.net. You can schedule an appointment from there, and we can get started on, you know, building out a strategy to building out an investment strategy to get you closer to your end goal financially.
Thank you so much. You've been quite insightful and helpful. Thank you.
No, no problem. My pleasure.
I have a question. So it seems as if there's no real, it's kind of like by luck or, the draw of which coins actually perform better. Are there any kind of people projecting how the performance would be so that people can make wiser choices? Because you mentioned don't even talk about Shiba or Doge. Just get that out of your vocabulary. But how do we know how to get in early on the next big wave?
So when you're talking about meme coins, those are 100% luck. Um, there's there's no telling, which meme coin is going to go to 100 million or which meme coin is going to go to $30,000 and then go straight to zero in 5 seconds. You literally can't tell. But with some of the, I guess, more like official projects, those are the ones that have like real value. That's when I talk about use case. If you have a project that they're trying they're trying to make a real impact in the real world, those are typically the ones that where you can have those those bigger returns, like the ones we were talking about here. All of these are like real use case coins. Matic is a layer 2 blockchain. They were trying to solve the problem of Ethereum back when Ethereum had gas fees of, like I was talking about, like $700-800. Matic was solving that problem. Tailcoin, they were solving the problem of when you send money like across to different countries. Like if you work in America and you send money back to your family in Europe or even just to Mexico, there's a lot of fees that happen if you do that now. Like going with Western Union or MoneyGram. That's almost $1 billion industry in itself just for people trying to send money to different countries. And Tailcoin, their project was addressing that. Solana, they were advancing on the like Ethereum problem. They made a blockchain that was super cheap. It wasn't as decentralized, but it was more people could use it without the gas fees making it unusable. Flux, that was I think they're like a decentralized storage. And so how we have like servers now, they were like allowing people to turn their computers or to buy their own servers at their house and turn those into storage, and you get paid by allowing other people in the internet to use your storage system. CAS, they're a layer 1 blockchain, and what that means, not layer 1, I'm sorry. They are layer 1, but they're a proof of work, and that's a super technical term, but they were creating a blockchain that had the same security as Bitcoin, and that project has done good. So like all these projects, they're solving like a real problem, and that's where you can tend to find bigger gains in crypto. It also just depends on like the kind of the cycle. Like you don't know, it can be like a legit project, but you don't know when it's gonna, when that price appreciation is gonna happen. It's hard to tell. Sometimes it happens with like, it's just, hey, we've got like 10 million users, in the last month. That could be something that drives it, but generally speaking, it's hard to know when that's going to happen. But just historically speaking, those have been, and I'm not saying go out and buy any of these now, because I think Matic has pretty much that project's become obsolete. CAS might be on its way to obsolescence too, but I'm just saying like these are examples of like what projects that have like a real use case can end up doing. Does that answer that question?
Yeah, thank you. All right. I know we have about 5 minutes left. Does anybody else have any questions? All right. Well, Mike, can you share that screen where people can contact you?
Yeah.
You guys, please feel free to reach out to him on his website, his IG, any of these social platforms. And thank you so much for sharing your knowledge with us this evening.
No problem. My pleasure.
All right.